Hello everyone, welcome to today's webinar. On behalf of the National Transit Institute, I welcome you and thank you for participating. The National Transit Institute develops, promotes, and delivers training and education programs for the public transit industry in the United States. Today's webinar is for NTD Annual Reduced Reporting for State DOTs. We are pleased to have as our presenters today Bailey Krause and Eric Chadwell. Bailey Krause joined the NTD team in 2014. She is a graduate of Michigan State University and currently serves as the Validation Manager for the National Transit Database Rural Reporting Module. Eric Chadwell joined the NTD team in 2016. He is a graduate of James Madison University and currently serves as a Validation Analyst for the Rural Reporting Module of the National Transit Database. Today's webinar will consist of the presentation material and question and answers throughout, actually, but we will also address them at the end. If you do have a question as the presentation is going on, you can ask it by typing into the Q&A box. If you don't see the Q&A box, if you hover over your menu bar, which might be at the top or the bottom of your screen, it should be an option. When you type your question in there, either maybe Eric or Bailey will either type your answer to you, or if we can't get to it, I will moderate the questions that are left at the end of the presentation. If you haven't already obtained a copy of the handouts, the presentation handouts, it should have been emailed to you with the link, but I pasted it in the chat box. If you need it or that gets scrolled up too far, I can always paste it again. And I guess that covers everything. And I will now turn the presentation over to Bailey and Eric.
Thank you, Lori. And thank you everyone for joining us today for the 2019 State DOT training presentation. There's a lot of material to cover, so I'm going to go ahead and jump right in. And if you do have any questions, please utilize the chat feature, as Lori mentioned, for questions you may have going through the presentation. If they require more of a verbose answer, we may wait to the end so we can kind of get into more of the technicalities, but if it's something we can answer, we'll definitely answer throughout the presentation as well. First part, I'll be talking. Second part, Eric will be talking, so we'll be switching back and forth on who will be answering these questions as they come up. There we go. All right. So contact information from the National Transit Database is found here for our help desk. It is open from 8 a.m. to 7 p.m. Eastern Standard Time. I would suggest attempting to reach out to your analyst first, and if after hours, reaching out to the help desk if applicable. Basically, your analyst will know the most information about your report to give you the best information and best answers possible. Again, my name is Bailey Krause, and I'm the Rural Validation Manager here and have been working with states and tribes for going on 6 report years. And I'm joined by Eric Chadwell, who will pop into the presentation about halfway through when we start going over the individual forms. As I mentioned in the beginning, we will have a lot to cover, and the subject will be an NTD Overview, 2019 Changes and Clarifications, NTD Fundamentals, Interface Review and User Management, Report Year Kickoff, 2019 reporting forms, common reporting challenges states face, report submission, and of course the validation, and then the closeout processes. So quite a few things we're going to be going over. First off, that quick overview of NTD. NTD was established to be the nation's primary source for information and stats on all public transit modes within the U.S. It is a source of data for performance measurement benchmarking as well as research. Recipients and subrecipients of Chapter 53 funds report to NTD. Subrecipients of State 5311 funds report data through their state report. These subrecipients may include those that have received funding in the past and are still required to report based on continuing grant requirements, or those that wish to receive it in the future and will report voluntarily. So why do you report? Well, 5311 subrecipients and recipients are required to report due to the grant requirements as stated here under Section 5335. Like I said before, data from the NTD is used in multiple ways, such as performance benchmarking, basically, trying to figure out where this data is coming from, where is it going. Research and statistics programs, we do get a lot of calls from different colleges and different stats programs about the data in general, just trying to come up with pretty good, theses, etc. on data in general. A lot of stats people. And of course, the most important probably to a lot of you all, formula apportionment as seen here. All right, NTD data is due on the following dates: October 31st, January 31st, and April 30th. These deadlines are closely monitored, and if you do have any questions on when to report, please reach out to your analysts. Usually these are about 4 months after the close of your fiscal year, so that's why there is that lag between your fiscal year end date and the October due date. These will be on the state DOT's fiscal year end date, so that's how these come up. All right, so now we're going to go on to the 2019 changes and clarifications that might affect your report or your subrecipients' reports. First clarification concerns evacuation or disaster service. Has been coming up because of the different hurricanes that have been going through southern states. So if an agency provides service in response to a natural disaster or as part of an evacuation effort, it is not reportable as public transit. If they do provide these services, please do not include the financial or service data as part of the NTD report. Next is the clarification on the transportation network companies, or TNCs. If you have agencies reporting to the NTD and contracting with a TNC or an on-demand service, and if the service is considered public transit, you must include data for this service in your NTD report. Oops, sorry, finger slip. As mentioned on the slide, the contract between your agency and the TNC must meet the criteria for purchase transportation as defined in the NTD policy manual. We will go over what purchase transportation means in a few minutes. Switching gears over to reporting clarifications, there are a few A15 clarifications. First up, passenger stations no longer need to be enclosed structures or buildings to be reported. Rather, it can be a significant structure. There have been updates made to the descriptions of the facility types in the policy manual to provide further clarity on what is and what is not reportable as to what should be reported as what type of facility. There's going to be a lot of A15 updates, so I'm just going to put it out there right now. I'm going to be talking about this for the next couple slides. Following up on the next clarification for RY19, you may report a condition assessment date past the fiscal year end date of your agency. However, it must be before the due date of your report. So for example, if your fiscal year end date is June 30th and your due date is October 31st, you may report a condition assessment date of October 5th for RY19. However, this will change in report year 2020, and you'll be required to report a condition assessment date within your fiscal year. This is to kind of go back onto how TAM is being reported and how the TAM information should be within the fiscal year that you are reporting on. Next on the A15 clarification list, transit agencies are required to inventory all passenger facilities used in revenue service, whether or not the agency has capital responsibility for them. These will include passenger stations or passenger parking facilities. This is something that was mentioned last year many times, but we just really wanted to clarify this year that these must be reported if you have these in your inventory. The facility type, ferry boat terminal, is now an option on the A15. We went through a lot last year, and we tried to reach out to as many people that have ferry boats as a mode to get these updated. But if you do have any of these types of facilities and it was reported as something else last year as like a stopgap, please make sure to go ahead and update that on the A15 this year to the correct type. All right, we're going to keep rolling with the A15 updates with the clarification that incidentally used admin or maintenance facilities do not need to be inventoried on the A15. It was clarified that incidentally used it was clarified that incidental use is when 50% or less of the facility's physical space is dedicated to the provision of public transit. So this could be either the physical space, or if you have a maintenance facility that is also a public works facility, you can kind of look at how many vehicles your transit agency has and is utilizing this space compared to the overall general public works vehicles. So 10 of 200 is incidentally used, 10 of 15 not so incidentally used. So kind of think of it that way. All right, last A15 update is again regarding the condition assessment. A condition assessment is not required for a facility until the construction is complete. If the agency is still using that facility during the construction, please inventory it. However, if it is not being used in revenue service, please leave off the A15. All right, next is a change to the A30, so revenue vehicle inventory, which is the addition of a checkbox for if a vehicle is autonomous. This is defined as a vehicle capable of performing all driving functions without human input under certain conditions. We're kind of looking at more or less like monorails. Not so much we're looking at any of the Teslas at this point. However, if there are any that you believe are autonomous, go ahead and check it off. Your analyst will, we'll ask you about it, of course, but if you don't have any checked off, we're not going to ask whether or not you do have any. All right, we just wanted to quickly show you where this checkbox will appear in the A30 form, as it's an optional field. You may just glance over it, so we just wanted to make sure it's right there. So it's going to be under the no capital replacement responsibility checkbox. All right, for the A35 form, I'm still with A15s, obviously. For service vehicles, those not used in revenue service, the clarification is that if you use service vehicles that are pulled from a pool of vehicles such as Public Works, again, you should report a representative fleet of the vehicles that usually support your service. So this will work like the requirement for the A30 where you're reporting the non-dedicated revenue vehicles. So just report a representative sample of the vehicles that you do use from that Public Works fleet. Another service vehicle clarification is about the intent of the estimated cost field on the A35. This is to capture the cost of a comparable fleet. It should reflect the current asset type and allow for moderate increases in cost due to inflation or improvements in technology. So we're just trying to look for that best estimate for the year that you're reporting it on. All right, last clarification for this year regards the service vehicle description. It was updated for clarity and it's on this slide. Description breaks down that the vehicle must be self-propelled and either roadworthy or a major piece of construction equipment. So we're not talking about any of the forklifts, golf carts, vehicles like that. All right, so we're all done with the clarifications for the year. We're going to go ahead and jump into a review of NTD fundamentals where we'll cover modes, types of service, revenue service definitions, and an overview of financial information. All right, so when reporting to NTD, the service must be public. So once that is determined, the mode comes next. I've included two of the most popular rural modes on this slide. So bus service is powered by a motor and fuel contained within a vehicle. It includes those that have route deviation, point deviation, or just a standard route. And then demand response, on the other hand, is defined as a service that is scheduled in response to the calls from the passengers, like a dial-a-ride. If you do have a deviated fixed route, so you're basically having a customer call into your agency or your subrecipient's agency requesting a ride and your regular bus service picks them up, please count that as part of your bus service. Do not count that as a deviated, or I'm sorry, as a demand response trip. All right. Another popular mode in the rural module is the commuter bus mode. We do receive many questions about what is considered commuter bus versus what is bus service. To clarify, commuter bus service operates with more than 5 miles of closed-door service, and the same type of vehicles are consistently operated on the service. If you think you have both bus and commuter bus service, please keep in mind that the vehicles shouldn't be used between the services on the same day, as well as the driver's work assignments shouldn't switch between one mode to the next. If you're currently reporting both commuter bus and bus service and should only report one mode, please contact your analyst for assistance in either determining whether or not you do need both modes or if you can combine them into the bus mode. The next topic we'll cover is types of service. Currently in the NTD, there are two types of service: directly operated, purchased transportation. Directly operated is when the service is operated by the agency and uses the agency's employees. Purchased transportation, and that's being very, very broad, I understand, but that's the basic breakdown of directly operated. Purchased transportation is when the vehicles are operated by the seller's employees, the service is branded at the buyers, and the buyer is paying the full cost of service. These are the very large main sticking points of purchased transportation. Of course, there's a written contract for a specific amount of time. There's a couple other big points, but these are the ones that we like to make to make sure something is purchased transportation. And really the huge sticking point is the buyer is paying the full cost of that service. All right, so after the mode and type of service is determined, what data should you be collecting for these modes? Some of the data is shown here, as well as the abbreviations that are going to be used throughout this presentation, as well as the report. These data points are collected on a per mode and type of service basis, except for sponsored on-link passenger trips, which are collected by the demand response modes specifically. The first data points I would like to discuss are the vehicle revenue miles and vehicle revenue hours. We'll talk a lot about revenue service, so what does it actually mean? Revenue service is when the vehicles are transporting passengers or are able to transport passengers. This will include layover and recovery time. Revenue service does not include deadhead, driver training, school bus or charter services, and vehicle maintenance. So what is deadhead? We'll talk about deadhead here and there throughout the presentation as well. So as mentioned, deadhead is not reportable in your revenue service, so this would include leaving or returning to the garage or yard facility, changing routes, or when there is no expectation of carrying passengers. There are detailed tables found within the NTD policy manual, which further clarifies what is revenue service for each mode. We've actually gone ahead and included these tables for you here, just because they're very important, and it's a very easy way to see, what is and what is not revenue service in a layout which is kind of easily consumed. So this is for the demand response mode type. Please note when the vehicle is dispatched from the garage to pick up a passenger, it is not revenue service, so it's that deadhead service I talked about a moment ago. And after they drop off the last passenger and go back to the dispatching point, it is also not considered revenue service. All right, so following up on the previous slide, this is a rundown of what is and what is not considered revenue service for the bus mode. Again, from the garage to the first stop of the route is not considered revenue service, and from the last drop-off point to the garage is not revenue service. A lot of what's in between will be, unless the driver goes on a scheduled break or, goes to lunch. It's not on duty, maintenance, training, etc. Okay, so next up on the different data points we'll report per mode is the unlinked passenger trips. So unlinked passenger trips includes all passengers. They're usually classified as regular or sponsored passengers. Passengers are counted each time they do board a vehicle, no matter how many vehicles they use from their origin to their destination. That's what we're talking about when we're talking UPT. So I brought up sponsored passenger trips before, and actually twice now. So sponsored trips, which are part of that unlinked passenger trip number being reported, are trips that are paid in part or in full by a third party. These may be part of a coordinated human services transportation plan. Common sponsors are the VA, Medicare, and assisted living centers. Again, when reporting the unlinked passenger trips, please make sure that the sponsored trips are part of that number for demand response modes. We've had a lot of issues with this in the past, and I'm sure Eric might actually bring it up in a couple minutes as well. So we just want to make sure we really hammer in that point that sponsored unlinked passenger trips should be included in that unlinked passenger trip number. It is a total number that we're looking at, not just a breakout of what is and what is not sponsored trips. Vehicles operating annual maximum service, which is a mouthful, or VOMs, are the number of revenue vehicles an agency operates to meet the annual maximum service requirement. So VOMs are going to be counted during the peak season of the year on the busiest day, but you'll want to exclude atypical days. So this would also include any volunteer vehicles that were used in that maximum service. It shouldn't really be the amount of active vehicles your agency has, unless literally all of your vehicles are out on the road at the same exact time. It shouldn't be that total. It should be part of it. So if you have 10 vehicles, but only 8 vehicles are out at once during the peak season, you're going to report 8. You're not going to report 10. If we do see, 10 to 10 match, we may ask you about it, especially if you have a lower amount of service. So just wanted to, prep you for that. So not how many vehicles you have total that could be out, but how many vehicles you actually did have out during one time during the peak season of the year. Okay. So those are the data points for service that we'll ask for in later on in this presentation on the RR20. So what else is on the RR20? Well, financials will be on the RR20. Another important definition for NTD is accrual accounting. So NTD reporting requirements for financial data follow generally accepted accounting principles, or GAAP, and accrual accounting. If there are conflicts between GAAP and NTD reporting instructions and requirements, NTD rules are to be followed. In accrual accounting, the revenue is recorded when earned, regardless of when the payment is received. And expenses are recorded when liability occurs, regardless of when the payment is made. So please see the example here for more detail. So you're going to report the 5. You're going to report when the liability occurs, even if the liability occurs in one fiscal year and you don't pay out to the next fiscal year, you're going to record it in that first fiscal year. We'll go over this a couple more times just to make sure it sticks. All right, so jumping into funding expense types. Operating expenses are the day-to-day expenses that a transit agency incurs. These may be for operating and maintaining vehicles, maintaining other equipment, planning costs, admin costs, as well as the other examples seen here. So a lot of operating expenses. Capital expenses are those related to the purchase of equipment. Equipment means an article of non-expendable personal property having a useful life of more than 1 year. This equipment will have an acquisition cost, which equals the lesser of the capitalization level established by the government unit for financial statement purposes, or $5,000, such as the vehicle seen here. So if your agency has a lower capitalization level, that's fine. We may ask you about it in validation stating, hey, you reported $2,000 capitalized. Please confirm that this was a capital purchase. And you can say, yes, we capitalized at such and such amount. We'll say, thank you for the additional information. We'll close that issue right on up. Okay, so we have operating, we have capital, we also have capital assistance spent on operations. So the reporting of that type will occur when capital funding is spent on activities that are normally considered operating, such as preventative maintenance and the purchase of tires. So please do make sure that you break out this type of funding specifically from your other operating costs, because they do have a different match percentage. So if you receive 5311 capital expenses to buy tires for your vehicle, you would report that on the 5311 capital assistance spent on operations line instead of 5311 operations line. Operating costs usually have a 50-50 match. However, capital expenses have an 80-20 match. So we definitely want to make sure that we're looking at the right matching structures, because there could be validation that would fire due to this. And Eric will actually go over some of the examples later on in the presentation to kind of give you a better feel of, what we're looking for, what could happen, etc. Okay. If your agency has more than one mode, the operating costs will be broken out between the modes based on direct and shared expenses. Once those are broken out, the shared expenses may be calculated between the modes based on a cost allocation method. So basically what we're asking, if you have a DR and a bus mode, you should try to separate all those direct costs between the two modes, such as driver salaries, any vehicles that you had that only service one mode compared to the other. You can separate it, whatever direct costs you can separate between the two modes. Anything left over that would be for like an admin person that services both modes, you may allocate between the modes based on a allocation factor. So those allocation factors could range from your vehicle revenue miles, vehicle revenue hours, your employee hours, and something of that nature. But you just make sure from year to year that you're using the same cost allocation method for any of those shared expenses, so we can get a better idea of the cost between the two modes. It all goes back to making sure the data is accurate and consistent year to year. All right, so we're going to jump back into reporting funding when you spent it, not when or like how much you actually spent, not what you were awarded. So seen here is another example on when the reporting was spent, which was the $178,000 in the example, versus how much the agency was awarded, so the $275,000. So just make sure when you're going through this that you're looking at what was actually drawn down on or requested to be drawn down upon versus what the agency was actually awarded throughout the All right, switching gears over to the Pam Rule. So for TAM, everyone's probably heard about TAM for the last 2 years straight, so we just want to do a quick overview just to make sure everyone's still on the same page and we're going forward with it. So those that receive Chapter 53 funds and either own, operate, or manage capital assistance used in providing public transportation services are required to report data for their assets. For recipients of 53B1D, 5310, I apologize, B1D, if they do not provide public transit services, they are not required to report under the TAM rule. So private providers, I'm sorry, not private providers, private transportation would not, the client-to-client or client-based services, not reportable. Public transportation, yes. Okay. With regards to how the data is reported, for those in the sponsored state DOT plan, you will report the assets associated with the plan on the individual subrecipients package. However, the targets and narrative report will come from the state DOT. If the state DOT actually is the TAM plan sponsor. If your agencies have individual TAM plans, then they would be under the individual agency's A90 if they have one. There's only a handful, so I just wanted to point that out. All right, so here's the TAM phase-in schedule. As you can see here, we're going into RY 2019. This means at least 50% of the applicable condition assessments should be reported, and your narrative report must be submitted with this year's report. So that would be, again, submitted with the A90 specifically. So if you are a state and you have a group plan, and you are the group plan sponsor, you will submit your narrative report with your A90. If you have subrecipients that are reporting on their own TAM plan, then each and every individual subrecipient needs to report their own narrative report on the A90. Your state may have tier 2 participants as part of your plan, and these will mostly consist of the 5311 subrecipients, 5310 asset only subrecipients, and 5307 or tribal small providers. You'll report data on behalf of your managed participants, such as those 5310 and 5311 providers, while the urban or tribal direct reporters will submit their own asset data on their report. That data from their report, however, will be pulled into the metrics on your E90. However, and as you go and as they fill it out and as you fill it out, the metrics will change. So the state DOT will be able to view the asset forms of any of the direct reporters underneath their plan, but you will not be able to edit them. So the data submission for the state will work as it has previously, with the state submitting one report on behalf of its managed subrecipients and participants. Okay, with TAM, capital responsibility comes up a lot. So multiple times, especially throughout this presentation. You'll see it probably in A15, A35, A30. Yeah, those three. So please see the list here to determine whether or not an agency has direct capital responsibility for an asset. As a note, for the third bullet point, an infrastructure asset itemized as a capital line item in the budget does not necessarily mean an agency has direct capital responsibility. Agency must also have management or oversight responsibilities for the line item project. In addition, performing minimal preventative maintenance work doesn't necessarily indicate direct capital responsibility. I know that's a mouthful. If you do have any questions about this, please feel free to reach out to your analyst directly if you have any specific questions. Okay, as I mentioned in the TAM phase-in schedule, the narrative report is due this year for every agency that is submitting a plan. So be the state as a group plan sponsor or to individual agencies that complete the TAM plan. The report may include any changes in the transit system that may affect progress towards their targets and should include the plan in general. The report will be uploaded to the A90 form at the bottom. As you can see here, a little upload button. It should usually be in a PDF format and signed, so that might be part of it. I just want to put it out there. If you do have problems uploading it, please let us know. Okay, please see here for a list of links to the key reference documents. Included are the glossary and annual reporting user guide, as well as the USOA that was updated last year. Here are some additional links to the policy manual, in which you will want to select the reduced reporting policy manual because that is the one that is for the small urban states and subrecipients. The full policy manual will be for those full reports that report a lot more information. Your information will still be in it, it just won't be as condensed. So we usually try to steer states over to this one specifically. as well as the TAM Facility Performance Measure Reporting Guidebook, which you probably saw last year, but we wanted to make sure we did this year. All right, so we've gone over some of the fundamentals of NTD. Now we're going to get into the forms, logging in, that kind of information. We'll probably be doing a little bit more definition review when we go through the forms, but now we're going to jump into NTD interface and user management view. First off, the NTD homepage is found at www.transit.dot.gov/NTD. This is where data products, policy manuals, and a clickable link to go to the reporting system, among other items, are housed. After logging in and following the login instructions, which I'll go over in a moment, all users land on the Newsfeed tab, which will have updates from our staff. The next tab is the Tasks tab. Tasks can be assigned between users of an agency. However, you may receive a task if you leave a form unsaved or incomplete midway through. Usually, if you get stuck when you're trying to submit a package, there will be a task here for you to complete the package submission. So if you don't see your action completed successfully, look at your task tab. If you don't see anything there, call your admin. The majority of your time will actually be spent in the Records tab. This is where you'll find the package and the profile for your agency, as well as any of your subrecipients. We'll go through the package in a moment, but the profile is where you will edit your mode or modes for your subrecipients, the agency's basic information, as well as view other users from your agency. These forms usually do not change year to year. So to view the individual forms, you'll go to Related Actions, and then I'm going to go through the two most profile actions. The Efile Library is where you can filter through communications from prior years, as well as this report year. So you may review closeout letters, for example, through this area from prior years or from RY18. The Form Library is where you will see data from previous years that has been submitted to NTD. You'll use the drop-down menu to select the package, then the link in blue for whichever form you want. So these will be downloaded in HTML format. You can look for any of your closeout, any of these submissions, prior years. You can look at the one most previous or the most current one that you've submitted. So if anything's in black and not a clickable link, just let us know. Unless it's for something that you're currently filling out, then that is expected. In addition to viewing the forms, under the Related Actions tab of the profile, you'll be able to print the previous year's report package in full rather than form by form. Other actions you can complete is viewing and editing the profile forms, which I mentioned earlier, so the P10 basic information form, the B20 or mode form, and the P30 to review users for your agency. If you do choose to print your annual report package, you'll be taken to a new page where you'll click on the refresh button until the link comes up for you to download the file. So there's that nice handy dandy refresh. You may have to hit that for 2 to 3 minutes sometimes. Depends on how big your package is. As a state, you cannot do a print all at this time. You'll have to go through your individual subrecipients. That is something that we are working with developers to get going as soon as possible. We understand that this is a hole for a lot of people to do, so we understand 100% where. So after you click that refresh button, it'll populate a new page. So this slide will show where the downloadable file will appear after it populates, and clicking refresh button, it kind of hides on people, so we wanted to make sure to point out where exactly it is. So if you do go through and print any of your other forms or export any of your other forms within the packages, this is where the printable version of it will appear every single time. It kind of shows up more towards the top underneath the package, but above the forms. So if you're looking for it, you still can't find it, let your analyst know. We're happy to walk you through. Or the help desk, whoever you can get a hold of. Okay, so to circle back to logging into the system, you'll first need to be a user. To add users, each agency must have a user manager. User managers may edit and add other users and may also fill NTD roles such as the CEO and NTD contact. The most important users to have on your account will be the CEO and NTD contact. The CEO will be the director or CEO of the agency and will be the one submitting the original submission of the report. The NTD contact will be the main point of contact for the analyst to reach out to. So after that first submission, however, the NTD contact may submit any subsequent revisions the report may need afterwards. If you only are one person in an agency and that is it, the CEO is the person to be, and we'll just reach out to the CEO at that point. Okay, so after you have an account saying, I don't know what to do next, reset your password. To reset your password, you'll need to go to the reporting homepage and click on the Request Password Reset. Then you'll fill out your username, which will be your full email address, all lowercase. So all lowercase is very important. If you have a capitalization or a capitalized letter throughout any part of it, just lowercase it. The system will not know it's you, so just make sure everything's on lowercase. So as soon as you click on that submit, you will receive an email with a link that is only active for 15 minutes. So you'll click on the link and you can set your password. As a note, your password will need to be at least 12 characters long. It needs uppercase, lowercase, number, and special character. So it is a long one, and you have to reset it every 60 days. So just putting that out there, you'll receive an email warning you, all that information. But yeah, 12 characters long. If you are already a user in the system and need to unlock your account, there are 2 different ways to complete this. So every 60 days, you get locked out unless you are logging in every 60 days, basically. So you can either unlock your own account if you have set up security questions, which I'll go over in the next slide, or you can submit an unlock request. If you do choose to submit an unlock request, the request will either go to the user manager on profile or to the NTD team for processing. If you are a user manager, it will either go to the other user manager, or if you only have one yourself, it will go to us. As I mentioned, if you have set up your security questions beforehand, you'll be able to unlock yourself. So to set up your questions, you'll go to the top right-hand corner of your screen. There should be either a picture of you or a little avatar. After logging in, select profile, then related actions, then manage security questions. From there, you'll be able to follow the steps to set them up. I believe there are 3 questions, so they're not too hard. You should know your own questions. All right, so going on, I would like to go over what self-reporting subrecipients mean. If you grant access to your subrecipients to be self-reporting, they will have the ability to edit and save their data as well as their validation answers. Self-reporting is completely optional, and when this access is granted, the subrecipient will continue to reach out to the state DOT for technical assistance or policy questions. If the state has additional questions or they're not quite sure of the answer, the state will then reach out to their assigned analyst on the team. If you choose for your subrecipients to be self-reporting to get set up in the system, they will first need to fill out a user manager designation letter, and then they'll send it to the state contact. The state contact will then forward along to the NTD analyst processing. The user manager designation letter will need to be completed, printed on agency letterhead, and signed by the director or CEO of the transit agency. After processing, the user will be sent an email advising them of their account creation. Please keep in mind that all correspondence should go through the state before the analyst, so we're just keeping everyone on the same page that way, and no one's being left out. Information is shared. Total transparency. All right, so last of my talking points, which I'm sure you're happy not to hear my voice soon. We're going to go ahead and jump into the first step of reporting, the report year kickoff. The report year kickoff is there for states to set up the report packages for the year they are reporting in, as in this year's report year 2019. To start, the CEO delegate, and the NTD contact will have access to the task after the state's fiscal year has ended. That user will then select the task from the task menu, then accept and proceed. So all three users will have the same task. However, once the first person accepts it, it will be in that person's task list only. So when whoever is ready to go and whoever wants to do it, just make sure they complete the process or assign to someone else before logging off. So that way it doesn't just get lost. We can get it back, don't get me wrong, but we just want to make sure that you just complete the process. I can make it a football analogy, but I won't do it right now. The next step is to verify the DOT users. You can review this information and ask your user manager to update what is necessary after the kickoff is completed, as only the user manager has the privilege to add and remove users on the account. So this one's kind of a FYI for you all. And if you did need to change somebody, you can say, hey, just write it down to yourself. I need to change X, Y, and Z. You can either reach out to your user manager, reach out to your analyst, get that going for you. After clicking continue on the previous page, you'll identify your subrecipients. You'll here be able to review the list from 2018, as well as add or remove any subrecipients you need to. If you are adding or removing subrecipients, you will have to explain why in validation, or if your analyst sees it ahead of time, you may have to explain it before. We just want to make sure we're catching everyone, nothing's getting left out, or there's not like a glitch somewhere. So we're pretty aware of your subrecipient lists. If they are previous reporters that you are adding or urban/tribal reporters, you can search for them and add them to the grid of subrecipients. If you search for them, you'll need to click on the search button to get it to actually launch the search. Please keep in mind that the search is automatically within your state. However, if they do have an address outside the state, for example, Greyhound in Texas, then you'll either want to open it up to the state parameters from the drop-down menu to all states, or in that example, to Texas if you do know the state. If you are adding a brand new reporter, you will input their information at the bottom of the page. You will want to enter the reporter name and the state if nothing else. The address lines do help the analyst in reviewing the new ID requests, and we would suggest that you enter them. If you do not have this information when you kick off, not sure of the name or the agencies that you're needing to add, you may add and remove subrecipients after the kickoff with the state's package under related actions, then manage subrecipients at a later time. Also, quick point, I did want to say that if there is another reporter with the same exact name that you're trying to enter, it will spit out an error. So you may have to do, advanced transit, your state, or Bluefield something, your state, because there are a lot of transit agencies out there, I think 2,500 plus. So there are a lot of counties that do overlap between, the states. So there are a couple of those issues, but if you are having that issue, we can always, look it up, see what they're called, see what you're trying to call yours, and try to come to a happy medium. All right, so after adding, removing any subrecipients, you will assign the subrecipient type. The type for existing subrecipients is preloaded with the information from the prior year. If you have any new subrecipients, you'll need to select what type they are from the drop-down menu. These types are the Rural General Public Transit Service, so 5311, Asset Only, so 5310 or other Chapter 53 other than 5307 and 5311, Urban/Travel Subrecipients, so those direct reporters, or Intercity Bus, so 5311F. If you need to change the type of subrecipient compared to what it was in the prior year, so an existing subrecipient type, please reach out to your analyst before making any of these changes, as it could have different ramifications for your package. So we just want to make sure when you're changing something that we have a very good detailed account of why it was changed. All right, so we have the types down. So next you're going to select which of the subrecipients are participants in the TAM plan for the state, if any. Urban tribal subrecipients are not going to be selectable from the state's package, as the participant would actually select the state during their own kickoff. So if you do have an urban or a tribal subrecipient that are directly reporting, they'll choose the state during their kickoff. And the intercity bus subrecipient types are not part of the TAM program, so you will not be able to select them either as part of your participant. So the state will be able to choose whether or not a rural general public transit type is in the TAM plan, because they may have their own TAM plan, they may be in a different state's TAM plan or a different MPO's TAM plan, or they have their own. And last but not least, the asset only subrecipients will be automatically chosen as participants in the state plan, because you know the reason for them to be in your plan or your agency's list of subrecipients if they weren't in your TAM plan. All right, so after clicking continue on the previous page, you have the types in, participants, whether or not, name of it. You're going to select which of the subrecipients will self-report their own data. So again, they'll have their own users, log in, edit the data. So this can be all, some, or none of your subrecipients. These designations do not carry over year to year, so they will be left blank, as in they won't be self-reporting if you continue without editing the page at all. The last step is clicking Continue, then OK. After you click OK, you'll be notified the report year kickoff is being completed and your forms are generating. This could take some time as the packages are populating one by one, so please be patient with this. Any new subrecipients that you created, so those brand new ones you entered the name for, will produce a task for your analyst to review and will not show up in the packages immediately. Your analyst may reach out to you upon receiving that task for more information if you haven't already talked to them about it beforehand. So after the kickoff is complete and your forms have generated, it's time to get into packages to fill out the data. With that being said, I'm going to go ahead and hand it over to Eric to walk you through the NTD package forms.
Thanks, Bailey. As mentioned, we're going to start going over how to complete the 2019 annual report. The main type of subrecipient we have is the Rural General Public Transit subrecipient. This type is for an agency that provides rural service and benefits from 5311 funding or is reporting through the useful life of 5311 funded assets. A standard RGPT reporter will have about 6 forms to complete. The data is split into different module type forms, the B for basic, the A for the assets, and the RR20 form, which is a combination of financial service safety data. The next type is the asset-only subrecipient. This reporter type benefits from funding that isn't 5311 or 5307 and owns, manages, or operates assets funded by FTA that are used in public transit. An example of this would be a 5310 provider that operates public transportation. These reporters will have a smaller package of forms that include a standard B10 identification form along with the 3 asset forms, the A15, the A30, and the A35. Next, we have the intercity bus subrecipients. These are providers that schedule bus service to the general public that operate with limited stops between 2 urbanized areas, connect a rural area to an urbanized area, or have their capacity to transport luggage. These 2 will have an abbreviated report that includes the B10 information in an abbreviated RR20 form that includes the 5311 funds expended, the vehicle revenue miles, and the unlinked passenger trips. Please note that these vehicle revenue miles and unlinked passenger trip numbers should be when providing 5311 services. And if the route is only partially funded by the 5311 program, to report all of the miles and ridership for that route. Lastly, we have the urban tribal subrecipient. This can be either an urban reporter that directly reports to the NTD that provides urban service or benefits from 5311 or 5307, or secondly, they can be an American Indian tribe that performs rural service who directly reports to NTD as well. Since these agencies already directly report to NTD, the state will submit an abbreviated report that includes the B10 information and the amount of 5311 expended. So please exclude the tribal transit funds from this tribal subrecipient report. So the first step in working on the report is getting to the package by going to the Records tab and then selecting the NTD report packages, which will show all of your subrecipients listed. Then you'll select your state package to review all the subrecipients, or you can select the subrecipient you want to work on for the time. Once you're at your state package, select the Subrecipient Reports tab to view all the subrecipient reports. You can filter these based on any of the headings you see, like the subrecipient type or the amount of open or total issued. To then get in the forms to edit, from the subrecipient package screen, select the Annual Forms button at the top right. This will then bring you to a new page where you're then able to select any of the package forms to go on there and then edit. The first one we're going to be going over is the Basic Information B10 form, which simply contains an agency's organization type and their fiscal year. You're going to be able to go in and edit the data from the summary page by using the drop-down to select the organization type. Additionally, please remember to enter the fiscal year end date of which the data is being reported on. So when you're done with both of those, select Save and Validate. Next, we'll be going on to the A10 form, the stations and maintenance facilities. The A10 form captures the type and number of maintenance facilities utilized for the provision of public transit and are reported based on the capacity and ownership types for those maintenance facilities. The definition of a maintenance facility is a garage or building where mechanics perform routine maintenance and repairs and typically services as an operating garage. Please note that we will not include bus barns in this count or any sort of third-party facility where you would take your vehicle to get worked on, much like the Jiffy Lube. If one facility you all have is shared by 2 or more modes, you may report a prorated share based on the number of vehicles it services. For example, an agency owns 1 facility and operates a demand response and fixed route bus service. Both modes share the facility and they own 20 total vehicles. The demand response mode runs 15 vehicles and the bus mode runs 5 vehicles. So for this example, we would expect to see 0.75 in the demand response form and 0.25 in the bus form. Also, please make note that when you're putting these into the forms that the total number of facilities between all modes equals a whole number. Then next we'll be discussing the A15, the facilities inventory form. So the A15 form collects basic information on facilities that are used to supply the public transit service. If your agency does not have any facilities, the form will need to be saved and validated as blank to indicate so. On this form, you will report administrative and maintenance facilities for which you have capital responsibility for. However, you will report passenger and parking facilities regardless of your capital responsibility. Examples of the type of facilities reported are administrative buildings, maintenance facilities, and then combined administrative and maintenance facilities. And for those that combined administrative and maintenance facilities, it will be required to have a note in the notes section to further describe those type of facilities. In addition, if an agency has an owned facility on the A10 form, we would expect them to have a facility entered on the A15 form. For more information about the types of facilities, more information can be found on the policy manual on page 82. So we'll be getting into how to fill in the facility on the A15 form. So first, you'll click the Add Facility link here. And it will allow you to enter the data into 3 sections: the facilities information section, the condition assessment section, and the address section. First one we have is the facility information section, where we're going to fill out the name of the facility that the agency uses, the primary mode it services, any secondary mode it may service, if it is a private mode or not, the type of facility that we are reporting, the year it was built or reconstructed as new, the square footage or parking spaces if it's a parking facility, the capital responsibility the agency has, and any notes that you would like to add to it. After you insert all of these applicable data points, hit the Next Section button. In the next section of A15, we're going to fill out the condition assessment, which will be an integer value of 1 to 5, as well as the estimated date of condition assessment, which should be when it was built or reassessed. The name of the facility will carry over from the previous section, and the ID is going to be assigned once you save the form. The last section is the address section, where we will enter the full address or the latitude and longitude. Once finished with all sections, you will select the Continue button. Upon clicking Continue from the last section, you will be sent back to the summary page of the A15 form. From here, you can save and validate, or edit your facility by clicking on the name of the facility or checking off the radio button next to it and clicking the Edit Selected button. The next is the A30 form, or the Revenue Vehicle Inventory form, whereas we're going to report all revenue vehicle inventory information. We'll categorize fleets based with their basic information and report the funding and ownership type for all these vehicles. If you completed the form last year, the 2018 data will pre-populate itself, and you only need to report new fleets or edit the existing fleets. You can enter new fleets by selecting the Add Fleet button as shown by the arrow there, or you can edit an existing fleet by clicking Edit Fleet. When adding a new fleet, you will fill out all required information. The vehicle type will be what the vehicle is, for example, a cutaway, a bus, or a van or a bus. The total vehicles state how many total vehicles there are in the fleet, which exactly match in all ways. The active fleet vehicles, or how many vehicles are active on the last day of the fiscal year. The next important point is the No Capital Responsibility field. This field is only checked if you do not have any capital replacement responsibility for the vehicle. So checking off this box will remove the requirement for reporting a useful life benchmark on the fleet. And lastly is the automated vehicles checkbox, as Bailey mentioned previously. Please only check this if it applies, and if so, I'm sure your validation analyst will be reaching out for more information about. A common question we receive is what the difference is between active and inactive vehicles. Transit agencies must report the number of active vehicles in a fleet at the end of the fiscal year. And active vehicles provide regular service and include spare vehicles, while inactive vehicles are awaiting sale or disposal. They're in storage. They're a part of an FTA-approved emergency contingency plan, or they're out for major repairs. Following up on the previous slide, please remember to retire fleets that are no longer in service rather than deleting them. Fleets should only be deleted if they were added to the mode incorrectly. So to retire a fleet, you will update the active vehicles to 0. And once that occurs, the question, is this fleet retired, appears, and you will select yes. Next, we have the service vehicle inventory form, where we collect an inventory of service vehicles used to indirectly deliver transit service. Agencies are required to report on fleets for which they have capital responsibility. Service vehicles include cars used for admin staff. They can be transit police cars or even tow trucks. However, agencies should not report small forklifts or golf carts. This form is going to work the same way as A15. So to create a fleet, you will select the Add New button. As mentioned, this is where we collect service vehicles to indirectly deliver transit service. So revenue vehicles that perform actual transit service should be reported to the A30 form rather than here in the A35 form. Also, if your agency does not have any service vehicles, the form should be saved and validated as blank. The first section is the service fleet information. It includes the fleet name, which will be what the agency calls it, the agency's fleet ID associated with the vehicle, the primary mode, any secondary modes, the type of vehicle, the number of vehicles, the useful life benchmark of the vehicle, the manufacturer year, and any notes you would like to add. There are 3 types of service vehicles, include automobiles, trucks and other rubber tire vehicles, and steel wheel vehicles. As a note, if your agency has more than one mode, the primary mode should be the mode that the fleet vehicles service the most, which is up at the agency's discretion. The second and final section of the A35 is the financial area. The fleet name and the fleet ID will carry over from the first section, and then the agency will fill out the transit agency capital responsibility percentage, the estimated cost, and the year dollars of estimated cost. Note that the estimated costs will include soft costs such as finance charges and will be the most recent estimate of the full cost to replace the asset. If you do not have a recent estimate, you can report the original cost of the asset or its insured value. If you do not have a recent estimate and do not know the insured value, you can report the original cost of that asset and will report the year that you purchased the asset. If you do have an insured value from your last fiscal year, you would then report the year that it corresponds to. So when all the information is entered, you're back on the summary page, you will select Save and Validate. Now we're on to the Reduced Reporting RR20 form, which contains the highest volume of data in the reports and is also the last form in the RGPT report package. When you open the RR20 form, the total fund expended is at the top of this form, which is the non-edible running total of the funding that you're going to be entering. The two numbers should match the total funds expended by mode and type of service as circled in red here. So as a reminder, the finances should be reported as revenues expended rather than earned. Agencies with more than one mode are required to capture and report expenses by mode and type of service and not allocate. To separate these funds, if you have more than one mode, you'll want to determine which expenses are direct and can be easily traced to a mode. And these may include specific driver wages or vehicle repairs. Then you're going to want to determine the expenses that are joints, which are costs that are incurred for the benefit of more than one mode and cannot easily be traced to a specific mode. An example of this could be a transit manager's salary. You may allocate these joint expenses or shared costs to each mode by an allocation factor, such as the vehicle revenue miles, the only passenger trips, vehicle revenue hours, or the number of employees. The next section of the RR20 is where you report the fare revenue. So the fare revenue include all income received and expended directly from the passenger, which includes donations made on board the vehicle. Fare revenue are further broken down between passenger paid and organization paid fares. The passenger paid are those that have traditionally been considered as a passenger fare. And these include, cash, full adult fares, and senior citizen fares. Then we have the organization paid fares, where an organization pays for or pays through a third party rather than the passenger paying for themselves. An example would be a university paying an agency to allow students to ride fare free on the vehicle. If you have more than one mode, you're required to capture and report these fares by mode and type of service. There are some exceptions to this requirement as we listed here, and if your agency is an exception to the rule, please make sure to make your analysts aware of this during validation so that we can note it, discuss it, and keep it for future years. Going in order of the form, here are some examples of the other directly generated funds. In addition, this is where we report the donations and insurance recoveries, along with non-full cost contracts. Revenues accrued through a PT agreement will be reported if you receive revenues from an agency that pays for the full cost of a service you provide, as long as it meets the NTD definition of purchased transportation. As stated, your analyst will discuss the situation with you further if you report funds to the facility. Below the directly generated funding section is the non-federal funds section. Enter the data accordingly based on what funds came from local funds, state funds, and other non-federal sources. Again, please be sure to report these based on what is operating and what's capital. So the local sources would include tax levies, general funds, and finances from local entities. State sources include, but are not limited to, state programs that support public transit and state portions of Medicaid funds. And for state funds, please note that these do not include the Chapter 53 fund that a state may pass through to a state. The next section, you'll see all the applicable federal fund sources from the list of programs here. The various FTA programs are broken down into detail. If the subrecipient expended funds from other federal grant programs, they would select other federal funds or other USDOT funds. These selections will require a comment to describe the type of funding that's being placed here. Examples of other FTA funds will include those not listed already in the form, such as Section 5308, which are FTA Clean Fuels Program funds. Examples of other federal funds may include HUD, but the most common funding that's reported here is federal Medicaid. And other USDOT funds will include funds from the Federal Highway Administration. After the financial section, you will then enter all the resource information here. Please include all resources applicable. The common error is to leave the reportable incidents or the volunteer resources blank. So if you don't have any volunteer drivers or vehicles or any safety incidents, please make sure that they're filled out with zeros rather than leaving blank. For service data, the miles and hours reported should only include revenue service, which is when the vehicles are transporting passengers or able to transport passengers. This includes layover and recovery time, but it does not include deadhead, driver training, school bus or charter services, and vehicle maintenance. Also, as Bailey mentioned earlier, make sure that the total UPT should equal the regular UPT and the sponsor UPT. After completing the revenue service section, the safety data section is the last on the R20 form. Reportable incidents include fatalities, injuries, or property damage that exceeds $25,000, collisions involving revenue vehicles that require towing away from the scene for any vehicle involved, or an evacuation for life safety reasons. Fatalities are reported when a death occurs within 30 days of the incident, and injuries are reported when a passenger is immediately transported away from the scene for medical attention. As mentioned, if there are none of these, please report zeros in the field. So the state does have a few forms that they'll need to fill out on their own. One of them is the RU30 form, which can be found in the state package that deals with the statewide characteristics. As you can see by the red boxes, there are two data points that needed to be filled out for this form. The 5311 expended on state admin and the number of counties with 5311 service. The total number of counties statewide is going to be automatically populated in the form. The amount of 5311 expended on state admin is the amount of 5311 funding that the state spent on administering the program, and the number of counties with 5311 service is the total number of counties served in whole or part by a 5311 operator. Please note that this should include counties served by tribes that receive 5311 funds regardless if it's from the state. The second form that the state reports is the A90 performance measures targets, as long as they are a group plan sponsor. The A90 is where we report targets for the portion of the assets that have met or exceeded their useful life benchmark. We're going to compare the current year targets to live data pulled from the asset forms of the sponsor participants. Only the group plan sponsor will report this form. And for the participants in the sub-packages, they only have a viewable version of this form. So if you have self-reporting subrecipients, they cannot go in there and edit this, they can only view it. The first section deals with rolling stock. So NA should be selected in the case where there are no vehicles reported of that type, while there should be a target reported for those vehicle types that you have a performance for. As you can see as the picture listed here, they have bus and cutaway, so they have a target for those two vehicle types. The second section contains the equipment targets. This is based on the three vehicle types reported in the 835 form of automobile, truck and other rubber tire vehicles, and steel wheel vehicles. And this section will be filled out the same way as the first section. The third section contains the facility targets. You will report a target for the number of facilities that rated a 3 or below on the scale. Lastly, in this section, you will upload your narrative report at the bottom, which is required this year, report year 19, and it should outline performance targets for your agency, the progress towards those targets, and it can include any changes within the transit system. So after you completed all the reports for the subrecipients in your few state forms, you're going to need to go in and submit the report within the system. So to do this, you'll go to related actions from the state report package summary page. So please note that only the CEO or CEO delegate can submit the original submission for the first draft of the report, and the NTD contact can submit any subsequent submission. So when you're in related actions, select the Submit Annual Report Package button. If there are any open issues, non-saved forms, or missing required data points, you will not be able to submit the report. And you will want to go to the SubRecipients package or packages and complete the requirements of all those outstanding issues. If all the data is filled out and there are no open issues preventing you from submitting, like an incomplete form mentioned in the previous slide, this page is going to appear, and you're going to click Continue. The next page, you will click on Submit. And after successfully submitting the report package, you will see a yellow notification box stating that the action has been completed successfully. If you do want to confirm that the report package was completed successfully and submitted successfully, you can go back to the state report package summary page. The report should be listed as in review rather than working data like it would be if it's on the analyst desk to work on. And next, we're going to be going through some of the common reporting challenges faced for reporters during the annual report. So there are different challenges faced throughout the report year. These mainly include understanding the NTD policies, completing the data entry correctly, the completeness of the entire report, and reviewing the validation issues in the system. The main challenge stems from the validation that analysts send back the report for. This occurs when analysts have questions about the data that was submitted. So validation includes, but is not limited to, time series checks against your prior year data that was submitted, logic checks between data items on different forms of the report, and checking for values outside the range for agencies with similar operating characteristics. So when these occur, agencies can revise the data to reflect the correct and accurate information, or they can provide a sufficient explanation to establish accuracy and even documentation requested by the analyst. One issue, as mentioned before, deals with the allocation of operating expenses. Agencies should report expenses by the mode and type of service. So you'll want to determine which expenses are direct and can easily be traced to a mode, and which expenses are shared to then allocate. Common allocation variables, as mentioned, include vehicle miles and hours, vehicles operated in annual maximum service or VOMs, the number of employees, or the ridership. Another one we see is in regards to the year-to-year funding and changes that making sure all the funding sources are used for public transit and that they're reported in the correct lines on the R20. We want to make sure that all funds are used to provide public transit, or all those funds are reported. So an example of why an issue would fire for local match if an agency reports only 5311 funding and some local match funds, but not all the funds the agency used to provide transit. There would be a possible validation issue about that. And another example would be making sure that the donations are reported to other directly generated funds rather than another line item. Also, as mentioned previously, agencies should only report service data for when they're performing revenue service. Revenue service, as stated before, does not include deadhead. Therefore, deadhead should not be included in the data that's reported. And deadhead is when transit vehicles are operating closed door and do not carry any passengers. So this includes leaving or returning to the garage to or from the starting or ending point of revenue service, changing routes, or when the driver does not have a duty to carry any passengers. So the removal of deadhead data or issues with revenue service may cause problems with performance indicators like revenue speed, which deals with VRM and VRH, the cost per hour and cost per mile changes, and trips per mile / trips per hour changes. So VOMs, or vehicles operated in annual maximum service, refers to the number of revenue vehicles an agency operates to meet the annual maximum service requirement. This includes volunteer vehicles during peak time and excludes any atypical days or one-time special events. This is not the total amount of vehicles that are available to perform service, but the maximum number of vehicles that are used simultaneously. One issue we do see is when an agency reports 100% of the active vehicles in the 830 form as their VOMs. And sometimes this can be correct, but the 830 can contain spare vehicles and they aren't necessarily out during peak service times. So your analyst will likely address this issue during validation if it does occur. When reporting a new vehicle, it is typical that an agency will report the corresponding capital expense on the R20. Capital expenses are related to purchasing a capital asset like a vehicle or making an improvement to a capital asset that increases its value or its useful life. The expense should include the acquisition costs, the cost of delivery, installation costs, and any modification. One issue that we do see with this is that agencies will report either new vehicles or the capital expense rather than reporting both of the vehicle and the expense. Additionally, please note that when you add a vehicle that is used for more than one mode, to report the expense to the mode that the vehicle is used most in versus allocating the vehicle cost between multiple modes. All agencies must inventory all vehicles that they use to provide public transit on their 830 form that have not been sold or disposed of at the end of the fiscal year. The inventory should essentially be a snapshot of the last day of the fiscal year, and the vehicles must be reported in that fiscal year when they become available for service. Some common issues that we do see are that an agency reports the model year and not the manufacturer year, deleting a fleet instead of retiring that fleet, and not updating the fleets year to year with retired vehicles. So at any time during validation, if you have questions on these processes or you're unsure how to do one of these things mentioned, just feel free to contact your analyst. So when completing the A90 form, you must complete the next fiscal year performance targets for assets you have capital responsibility for. The reports will not be complete if there's not a target for an asset class that you do have performance for. So some common issues include reporting the current year target instead of the next year's target, and not reporting a realistic target percentage. So for the realistic target percentage, for example, we have someone reporting a target of 28% when the agency has 2 facilities, which would more likely be 0%, 50%, or 100%. So we'll just be looking at the validity of the target. As a reminder, DOTs submit data on public transit operations of subrecipients who they award federal program funds to, and can be any of the 4 listed that we discussed earlier. Some common issues include removing reporters from the report that received 5311, excluding intercity bus subrecipients from the report, and removing and adding RGP subrecipients with grant requirements. Once you submit the report, there are a couple more steps that need to be taken in order to completely close out the report for the year. Your assigned NTD analyst will review the entire report for accuracy and consistency. They will compare the data submitted this year to the data submitted last year for any significant changes, as well as ensure that all data was reported to the correct fields. If there is any data change from year to year, please avoid stating generalized responses like stating the data is correct without explaining what actually happened during the year. You should be able to explain the change, which will in turn reduce the amount of back and forth between yourself and the analyst. Once the analyst has gone through the whole report, they will then send it back to the state to resolve any open issues. Each time this happens, the due date timetable is shortened, as there should be fewer issues each time the report is returned. If you do fail to correct any issues stated in the prior year closeout letter, they may be marked as questionable in the current validation year. Notes in the closeout letter typically relate to incomplete reports, which can mean either the data does not conform with the NTD definition, accounting principles, or it can mean that the agency did not adequately respond to validation raised by the analyst. All identified issues must fully be addressed in order for the issue to then be resolved. If either of the issues occurs, the NTD cites them in the closeout letter, which you'll eventually receive. The best way to resolve validation issues is to provide solid and detailed explanations that give your analyst a clear picture of the service. You'll want to explain why the data changed year to year, or what service changes took place to cause such a significant change in the data. And if you find if last year's data was wrong, we'll want an explanation as to why it was wrong and why this data this year is correct. So please note that if that is the case, FTA does not accept this for multiple years in a row. Again, to wrap up, here's the contact information for our team as well as the help desk, which is open Monday through Friday, 8 a.m. to 7 p.m. Eastern Time. So I'd like to thank everyone for listening, and now we're going to be opening up to any further questions.
Again, if you have any questions, you can type it in the Q&A box. I know there were a couple, and there were a couple in the chat as well. We'll wait a few more minutes to see if any more come in. I don't know how long to wait. People might type slow. Oh, there we go. Perfect. Tim said volunteer miles, hours, and trips must be reported in DR, correct?
Yes. So if the service that you're speaking of is demand response in nature and the volunteers are being used in that service, then yes, it would be reported in the demand response mode. As long as it's part of your public transportation, yes.
Great. Thank you. Any more? Well, if we wrap up and a question occurs to you, you have everyone's email address in front of you that you can always ask. And that slide appears in the handouts that were sent to you. And also there's a link in the top of the chat. So grab that quick. Or you can always ask me and I can send you a copy, or someone here at NTI. I guess that's it. So thank you everyone for participating. Special thank you to all our presenters for their great presentation this afternoon. As a reminder, everyone will get an email inviting them to fill out a survey about this webinar. Please take a few minutes and fill that out. It really helps us moving forward and doing more webinars. So thank you everyone. Have a great rest of your afternoon. It's almost the weekend. Bye.